about Bank of Canada interest rates, mortgages collapsing, well, and Canadian economy crashing. Well, guys, did you know that there is like more than $250 billion worth of mortgages coming up for renewal? And that means everyone who got themselves locked into the mortgages at what percent? Close to 0%, right? Like 2% or something like that, are going to, well, renew their mortgages, and chances are the payments of those Canadians would go up by like 40% up on a monthly basis, and that is insanely catastrophic for Canadian economy. I know some people watching this channel will be like, hey, I opted out and I'm renting and I don't give a damn. Like, you guys, you purchased your home, it doesn't impact me. I'm a tenant, so I don't care. What impacts me as a landlord, I purchased a bunch of real estate myself, and woohoo, I'm going to play the victim. But no, let me explain to you guys what is actually happening. It's actually bad for everyone. Because look at it, let me tell you guys, well, let's start with Bank of Canada, and basically Statistics Canada recently announced that, well, finally the inflation rate is in control and things are getting better. A lot of people are speculating about interest rates potentially dropping. You know why the interest rates might drop? Why would they do that? Why would they drop interest rates, right? We haven't yet collapsed Canadian economy. They haven't yet declared, we haven't yet declared, but let's see, that Canada is going into recession, but we have a lot of things happening, real bad things that not many people talk about, especially with the mortgages. There are people who got those mortgages at insanely low interest rates, close to 0% prime, right? So about 2% mortgages on a variable rate, just below 2%, like 1%, and it got fixed, and a fixed variable rate in such a way that it doesn't really go up. And guess what's happening to those people I'm talking to? And their amortization period, guys, is going up in a negative amortization period. It means that, well, because the Bank of Canada increased the prime rate, their payments are, well, they're going up, so they're charging more interest rates, and now they are not paying towards, guess what they're not paying towards? They're not paying towards their principal. Yes. My wife, actually, she has a mortgage, and you know, for one of the properties, guys, I have multiple mortgages, so she had one of the mortgages only on her name, and guess what? She just went and revised it because it's a variable rate in order for her not to have negative amortization. Luckily, we can afford making those payments, but some people cannot. And that means is that their amortization period that was 25 years, some of them are going to be 45, 55, 60 years of negative amortization. So that's until they pay off their mortgages in Canada, because their payments were supposed to go up with the interest rate going up by like what, 500 basis points by the Bank of Canada, which is insane, historically colossal, something we haven't seen for couple of decades now. And my goodness, this has happened to us. We went like from really good interest rates to insane interest rates now, and well, people are going into debt. So what is happening right now? Why aren't investors who went into variable rates selling their properties? Well, guys, there is actually, I think, one out of 5 major banks that's only, guys, you know, actually adjusting their variable rate, and some banks are not even doing that. So the payments for people didn't go up, but their amortization period started to stretch. And well, banks are not declaring economic default or anything, you know, and people who purchased those properties are still making only interest payments. Some of them are not putting anything down towards their principal, and some of them have a negative equity where basically the loan is going up. Like, they are actually getting more into debt every month because they are underpaying. It's kind of, guys, weird on how it all works. Like, if you want to know how the mortgage works exactly, guys, I'll tell you, I have a professional within the family. My wife, Nito Realtors, is a mortgage broker with DOC Clear Trust Mortgages. I'll leave her contacts in the description of this video. Go check her out if you need a renewal and you need help with this interest rates with your mortgages, and you need to get a better interest rates because your banks would normally not give you a better interest rate. Reach out to her. She's going to help you out. But anyways, what's happening? guys, it is good for me to have a mortgage broker within the family and being myself a realtor with eXp Realty. So I know a little bit more about real estate than majority of Canadians are because of my training and experience and economical background. I have masters in economics. Anyways, guys, this is what's happening right now in Canada. And some investors I talked to, and they're like, hey, man, yeah, my payments didn't really go up, but I'm losing equity. But you know what? Hey, I can make a lump sum if I need from those payments if I need to. And some people are managing to go and pull up a second mortgage on their property because the investors are not selling their homes, because they kept their homes on rent. And the rents are still generating profits. The rent started going up, but their payments are still the same. It's not yet coming up for renewal. So you know, I want to say, guys, some people are like, hey, Igor, I know you keep on investing into real estate, you're running Airbnbs and so many rental properties, you are doing like, you know, this landlords, I hope they collapse. I want to say, guys, how is this?
Your message to landlords then is, suck it up. That's the risk that comes with an investment.
Yeah, I'm going to tell them to suck it up.
Working, it's actually going back to the tenancy. So people who didn't buy real estate do not escape the economical consequences of high interest rates. There is such a thing as a turnover in Toronto, guys, and in Vancouver right now. So basically what's happening is the interest rates would go up, and people, let me tell you guys, so I'm going to mix things up a little bit, but I want to keep you on track of things. So let's say you are a tenant and renting out from a landlord, and their payments went up, the renewal came up, and they estimated that, you know, 40% of their income has to go up into their mortgages, and they're like, well, you know what, this property no longer cash flows, doesn't make sense holding it back. They put it on the market, they sell it to another person, and that other person takes the property, and well, as a tenant, you have to vacate the property, so you're out on the market, and you might have been staying in that property for past 3-4 years. Your rent is still good. Let's say you're in Toronto and you're kind of protected from rate and you know, the rent increases, and now you're back on the market and you face what are the current rents. Even in Calgary, same thing where I am right now. So you know, an average increase in your rent would be up to 40%. So now, because you have to go and find another place, you have to pay market rent and not what you had in a contract with the landlord. And you have to bear the price of high interest rates. Whether you are a landlord or a tenant, you're not excluded from economical consequences of this entire thing. Now, guys, I know some of you, you know, people are like, hey, Igor, is there many foreclosures? I want to buy some foreclosures. The banks, they really want to buy your homes. Things that people don't understand. One thing, the banks, they do not want your home. They don't want your home. I don't know why people are thinking that banks want your home. During the pandemic, they gave a tax break. They gave you, there was a lot of people who could skip up to like 4 payments on their home, on their mortgages. So they literally, the lenders, they can do whatever they want. The banks, there are 5 major banks in Canada. They run this country. They have all your money, all of our money. They ran this country. They are the lenders. They can do whatever the hell they want. As lenders, they are exempt from legislation for mortgages. Well, not exactly, but I mean, for example, as a mortgage broker or a real estate agent, you have to be regulated by the province and blah, blah, blah. But banks, they are the lenders, so they don't need to have those licensing. They're not regulated by Real Estate Council of Alberta, like RECA, or what is there in Ontario? How do you call it? Basically the same thing for Ontario. For every province, you have a different regulator, and everything is about very similar. And well, they are lenders, they are exempt, they can change the rules, they can have a negative amortization, they can give you a break and things like that. You know why they do that? Because banks don't want you to lose your home. And especially banks don't want your home to be cheaper. So hear me out, hear me out. People are like, oh, the housing is going to crash and you know, the economy is going to get better. The banks who run the country are not motivated for the housing to be more affordable because they borrow, they create money from the loans that they have. If their equity drops, their risk of default increases. If you lose a house, they go through legal proceedings of selling the house, repossessing the house, lots of expenses, and a lot of times those people file for bankruptcies, and there is not much money for the banks to take away your home, and they don't want you to lose your home, number one, and number two, they don't want the home price to drop, because now if you have a mortgage, they give away the money, they can borrow money against that mortgage from other banks, and they can literally recreate the money, they can spin it around. I can make a separate video about it, how money is created through the banks. So literally they can take a loan against your loan money that they given you, and if the property value goes down, the risk goes up, and they can make as much money from that property. So their assets and their value is, as the bank is going down. So guess who is not interested in the housing to become affordable? Yeah, you would say the government, the banks, and the banks, well, the banks are, you know how it's all connected. Do I have to explain this to you right now? Hear me out why we don't have enough inventory, and then let's talk a little bit about the interest rates. So, okay. For example, I'm working as investors, and they're having nice mortgage payments. Even though the interest rates went up and some of them are on variable rates, right now they're like, hey, well, I'm still cash flowing. Yeah, I'm building a negative equity in a way, but my property is going up. My payments are less still, and the refinance is not yet coming, and my payments are still less than I'm getting from the rents. The rents are going up. Why the hell would I be selling the property, right? Right now to put it in the market, and it creates the shortage of inventory still. Even in such a high interest rate, we are experiencing a shortage of inventory. And guess who makes that? Well, of course, Canadian banks that you know, can impact things and change things. But hear me out on this, guys. There is a big fear that Bank of Canada has, and well, I'm sure they want to address it, because we are coming to a really tough time. You're thinking, okay, well, the refinance is going to come, people's payments are going to go up. People's payments are going to go up on the refinance, guys, and they would have less disposable income. Imagine this. If you are a landlord and well, my guys, refinance is coming this year, so it's going to be fun. I already have a mortgage with higher interest rate because I purchased one of the properties last year, and one of the properties has a freaking awesome interest rate. I have to refinance this year, so it's going to be fun, and I'm not really excited about it. Should I be crying? No, but let's see what happens, because I think that the Bank of Canada is going to bail us out. I really do think that that's probably going to happen, because look at it this way. Guys, if I am the landlord and I own a property and my monthly payments become higher, let's say 40% of a Canadian income of a family has to go towards the mortgage, it means that that family doesn't have 40% of money for vacations, for cars, for fuel, for food, for other expenses. What will run the economy? It's going to damage Canadian economy. It's going to throw out billions, hundreds of billions, maybe trillions of dollars out of Canadian economy into mortgage payments, out of businesses that create jobs for those Canadians who are paying mortgages. So on this refinance, and it's upcoming about $260-something billion in mortgages, all of that money, all of that disposable income that Canadians have would have to get out of the economy, less spending to essential and non-essential expenses, and more towards housing if you want to live somewhere. Now, talking about that, some Canadians are stuck with their houses because now in order for you to buy a new property, for example, I helped somebody buy a property in a $300,000 range, and with this kind of income, you cannot afford even that right now with current stress tests and current interest rates. And guess what? The property values went up so much, so if that person was to sell the property, they won't be able to buy another one. And the situation with that means that they cannot sell the property, so there will be a shortage of inventory, and they don't want to sell the property because they won't be able to buy another one. But if the refinance comes up with the higher interest rates, they will still have to own that property because they can buy anything else, but they would have to figure out a way to make those payments. They might have to rent out their basement. They might have to rent out a couple of the bedrooms within the house to strangers through short-term or long-term rental and have roommates in order to afford payments, or they'll just have to cut down on their spendings, vacations, and other leisure expenses. And that is a lot of Canadians who are going to pull out a lot of money, and the Bank of Canada is also freaking out about that. So it's not only about housing. These interest rates are really brutal, not only for the housing market, but for the entire Canadian economy. What do you guys think is going to happen next? Do you think they're going to keep interest rates high? Or do you think it's going to scrutinize and just, destroy our economy? Because guess what? If people are not spending money, there is no jobs for them. If there is no jobs, people can pay their mortgages. If people cannot pay their mortgages, they go and default on the mortgages. If the Canadian housing market crashes, the banks, as I said, they run this thing and they lose their equity and they are in trouble. So what do you think is going to guys happen? Do you think they're going to try and do that and get the economy into recession, or they're going to start bailing out, or the banks are going to act in such a way to make sure that Canadians don't miss on their payments and mortgages? What do you guys think is going to happen? Do you think they're going to lower down the interest rates? Personally, in my opinion, guys, I think it would be really bad if Canadians have to spend all their money for their housing and not being able to spend any money elsewhere, losing their job and therefore not being able to afford the housing, and then housing market starting to crash, the banks have to lose their money and start this entire roller coaster. I think that there will be some sort of bailouts. At least I think Bank of Canada is soon going to realize. But at the same time, they're declaring that Canadian inflation is in control. But from my experience, guys, going to Costco, going to other grocery shops, things are freaking expensive in Canada. Guys, it is not cheap to live, and we all work really hard in order to be able to afford our life in Canada. Anyways, guys, leave a comment down below. Don't forget to subscribe to this channel, and we'll see you in the next video. Stay up to the date on the latest, Canada and real estate and economical updates on this channel. See you soon. Bye for now.